Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and it's TGIF. It's also July 31st, end of the month here. Wow, summer's going by very quickly, as it seems like it always does when you're having fun, right? Hey, we'll jump right into it. We do got a few economic news releases to go over today, and we'll start off with the Employment Cost Index. This is kind of a gauge also for inflationary numbers. So last reporting we had was at 0.7%. And the forecast for Q2 numbers here is at 0.6%, and it came in pretty low at 0.2%. So obviously our inflation numbers aren't too much from employment cost index. So this is basically the cost for employees that companies, the average cost that they incur while employing people. Chicago PMI. This is the manufacturing numbers out of Chicago region, and for the month of July. So you see 49.7, that was actually contraction. So anything below 50, we had contraction in the Chicago region. And as you can see, in July, we had improvement. So we actually pulled out that contraction to 54.7. So better news out of Chicago area in manufacturing here. And last but not least, we got the consumer sentiment for the month of July. We basically kind of stayed in the same range here. We had a 93.3, where forecasts go up to 94. And we had a slight dip, but still within the same realm at 93.1 here. Now next week, be prepared. We do have some the jobs numbers coming out. The Bureau of Labor Statistics will be providing theirs on Friday. Unemployment rates and job numbers, and we'll have the other ones as well. I forget their name, but anyways, the ADP coming out as well, the weekly jobs numbers. So be prepared for some volatility next week with job numbers, as those numbers will be important in terms of trying to, for the Fed decision of rate hikes and stuff this year. Stock market's coming up a little bit. It's not up a lot. It's just up a little bit here. We do have some earnings reports that didn't come out as well as they had hoped, but we do have some decent numbers here in terms of what we have for data that's brought out today. Bond market's taken off, as we saw. We closed up above, or we closed above that 10-day moving average, which is a nice sign. We basically closed at the break-even where we left off on Tuesday yesterday, and then we got a little bit of a springboard off that 10-day moving average. Right now, we're kind of, as you can see, at resistance line number 1, we're kind of pushing that right now. So we'll see if we can continue that. Right. So that basically is 34 basis points from where we left off yesterday, which will result basically in a nice improvement in our interest rates today. So as you can see, we haven't really been quite to this level since basically very first day of July, or first week of July. So we haven't been this high since then. So almost a month without being in this level here. And as you can see, we've been slowly working our way back. So we may have a nice improvement here for interest rates, hopefully in the near term here. So be prepared, and nice Friday to go into the weekend, right? So anyways, you guys have a great day and enjoy your weekend, and we'll see you guys on Monday. Today's my last day for my vacation, so we'll have a little bit better in terms of audio. So I apologize for any inconvenience the last 2 weeks here. But this week we'll be back on Monday. You guys have a wonderful weekend. We'll see you again on Monday. Take care. Bye-bye.